Let's talk about down payments and how much you really need and how much you should put down. What are the pros and cons of a higher or lower down payment? First of all, how much do you need? Well, zero down payment is not uncommon. For USDA loans, Veterans Administration loans, you don't need a down payment at all. Other programs like FHA, you're going to need 3.5% down, conventional, somewhere between 3 to 5% down. However, should you put down this small down payment or try to go for 20%? Well, the benefits of a small down payment is that you can buy a home a lot sooner. Instead of saving an extra $20 to $50 to $100,000, you can buy a home now instead of chasing home prices upward. Everybody thinks that home prices have to eventually drop, but nothing's been able to stop them. Even 7-8% mortgage rates, home prices still seem to go up and up. So I don't know what could bring home prices down, but chances are if you're trying to save a down payment, it's going to take you a few years, 20% down payment, I should say. It could take you a few years, and all that time you're chasing home prices up 3 to 5% a year. So what's $300,000 today could be $350,000 in a few years, and you're just adding to your down payment burden. That being said, there are some definite benefits of saving 20% down to put on a home, which I would encourage in maybe some more affordable markets that aren't rising as fast. Maybe in the Midwest where homes are $150,000 to $250,000. Sure, save 20% down. You're going to avoid private mortgage insurance. You're probably going to get a conventional loan instead of FHA, so you don't have to have that permanent mortgage insurance that comes with FHA. And at the end of the day, your mortgage payment is going to be a lot lower and more manageable from just a monthly expense standpoint. So it's not a bad idea to try to save 20% if you can. However, don't kill yourself over it. If you want to get into the housing market sooner rather than later, if you're in a market that's rising 5 to 10% a year, which there still are a lot of those markets around the US right now, even with the higher rates, you might benefit a lot just by getting the smallest down payment program that you can, putting as little down as you can, getting the seller to pay all your closing costs, so you're just eliminating that cash upfront outlay. So you're going to get into a home sooner, because you don't know that $300,000 or $400,000 house that you're buying today could be $450,000 or $500,000 in a couple of years. And if you would have tried to save 20% down, even 10% down, you might have lost out on that appreciation. So it kind of depends on where you are, your goals, what you're comfortable with taking on as a payment, but consider both. Consider a low down payment and a 20% down payment and see what's best for your situation.